Now, the ministers have already signaled that they will increase expenditure funded by fresh borrowings and various taxation measures. For the case of the region's biggest economy, Kenya, those taxation plans include new levies on infrastructure bond investors, as well as motor vehicle owners and online marketplace operators. Now, Nairobi's total expenditure is seen climbing 2% to $31 billion. That's below a 5-year average of about 8%. Let's now get some reaction to those budget announcements today. We're joined by Gabriel Mwangonda. He is an economic analyst based in Tanzania. Great to have you on the show with us, sir. Now, of course, analysts expected to see an overall rise in national government spending this fiscal year. As we saw ministers table their spending plans for the next fiscal year today, what were the key highlights for you?
Oh, thanks. I've seen the Tanzanian budget. They have continued in supporting their flagship projects, which are the standard gauge railway. The dam is in completion, in the final stages, almost complete by 99%. And other infrastructure projects are ongoing in Tanzania. And the flagship project of revamping the Air Tanzania has been allocated quite a lot of amounts. So when it comes to roads and bridges, a lot of money has been allocated into those areas. And when it comes to agriculture as well, a lot of money has been put into irrigation schemes and, trying to modernize the agriculture and making it lovable to the youth. And a lot of money as well has been allocated into the energy sector. So the construction of the East African crude pipe oil, the ECO project is ongoing. It has allocated close to almost 330 million USD into that project. Tanzania has got almost 15% of the shares in that project, so it is almost about to finish its contribution to the project. Similar highlights should be seen in the Kenyan budget, which was tabled today as well. And if you go to Uganda, it is the very, very same thing which was tabled, except for Kenyans. They are about to revamp the Nairobi infrastructure. Has been allocated a lot of money, and the railway as well has been allocated quite a significant amount of money. And there are some programs into youth empowerment and youth enterprises programs has been allocated a lot of money as well. In Uganda, we have seen a lot of money has been put onto the health sector, and as well as the education sector has been allocated a lot of money as well. So these too much spending into these kind of projects to me seems to be paying, because these are the projects that these developing countries should be focused on, because these are the things that can last for so many years. So these kind of investments, they will actually give a lot of return in the medium and long-term future. I mean, so we kind of support these ministers to keep on spending on development infrastructures.
Well, I want to delve a little bit further into those spending plans, because last year we saw a more optimistic mix of tax waivers and incentives, especially post the COVID-19 period. Did this trend continue this year again? And if not, how would you characterize these year's budgets?
Yeah, I've seen similar measures has been taken. If you look at the East African customs protocols, we have seen both of the finance ministers in all these three countries have been highlighting what they have agreed in and making sure that they keep on doing the waivers. Actually, these waivers, most of them are temporary. You hear them always telling us that these will last for only 1 year. So there are so many other products that have been waived. when it comes to, for example, steel, lithium batteries that are used in electric vehicles. If you go to the agriculture products, if you go to eggs between Kenya and Uganda, they have waived the excise duty on it. And so those kind of waivers are still in place, and it's like an extension of the previous waivers. They keep on trying to say it's going to be for this year only, but they keep on extending it year in, year out. And introduction of new taxes, yes, we have seen a lot of other measures to protect actually the local manufacturing industry. We have seen Tanzania has introduced a lot of other taxes, actually not introducing, actually trying to, instead of zero rating the taxes, they have introduced some, percentage of the taxes to so many other, a number of products. The aim is just to protect the local manufacturing industry. And similar measures, we have seen them in Uganda as well. The Minister of Finance in Uganda has introduced a lot of other measures to, waive other taxes and to increase taxes to some of the products that are locally produced and locally available. So the aim is to protect the local manufacturing companies, and which is very good, because by doing that you're not exporting jobs in the outside markets, and you are trying to make sure that all the money that is available in the country remain in the country, because that is the very, very key thing, because that is the only way you can keep incentivizing the locals. And the locals, if they have those kind of incentives, they might keep on investing more and more into their countries.
Now, of course, you alluded to it a little bit there, but we've also seen the increasing or the adding of new taxes, especially in markets like Kenya. And of course, finance ministers have had to face that delicate balance of raising revenues while at the same time avoiding a huge problem for African nations, which is debt distress. So how did you think finance ministers did when it came to that balance?
Yeah, it's a very tough question to finance minister. Any finance minister, not even only the East African finance ministers. You find that it's very difficult when your country is growing and the spending keeps on increasing, and you need to design and introduce other sources of financing your budget. So most of the people, most of the finance ministers who are lazy would look for loans only. But for the case of the East African economies, I've seen even Tanzania, Uganda, and Kenya trying to make sure that they collect more local taxes, and they collect more and mobilize more resources locally, and they kind of borrow a bit low, and they decrease the amount of borrowings. We have seen that in Tanzania, for example, the budget which has been tabled, which is around close to 18.1 billion USD. It is going to be funded locally by local sourced resources to the tune of 70%. So the people of Tanzania will fund the budget to the tune of 70%. You see the very same figure when it comes to the Ugandan budget, which is close to 19.1 billion USD. That budget is going to be locally funded by almost 71%. You go to the Kenyan budget, which is about 31 point something billion USD. Almost close to 60 something is going to be sourced locally. So when these countries, especially Tanzania and Kenya, which have graduated from low income countries into the middle income countries, borrowing becomes an issue, because they have to borrow on the commercial rates. Now the commercial rates are a bit higher, so it has to resort into trying to mobilize as much tax as possible so that it can fund its budget. So we have seen these finance ministers trying to make sure that they introduces new taxes so that they can raise a lot of revenues to fund their budgets. not like the way it used to be, because back in the day it used to be like 50-50%. You raise loans like 50% and 50% you kind of correct taxes internally. So now at least there's a very good balance between borrowing and mobilizing resources locally.